Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your financial market update for this Tuesday, the 6th of March, 2018, and we're just getting on to the 4:40 p.m. Central Standard Time. So today was one of those crazy days where we saw breakaways from the president's stance on his tariffs. Paul Ryan again said one thing. He does not want to see the shotgunner approach to everybody gets a steel and aluminum tariff. The second thing we heard was Gary Cohn is supposedly, I don't know if there's truth to it or not, supposedly told the president, or let it be known, that if the president goes ahead with that shotgun approach, he will step out of this president's inner circle and obviously away from any of the cabinet. So that gets very interesting as well. So where are we on everything? Well, I think it's an unknown. Obviously, the president has got a game plan. I know a lot of people think he doesn't. I think he's very shrewd. And I think his game plan is he runs this government like he runs his business, probably out of the back pocket. Let's see how this flies right now. You got me pissed, I'll throw this out. He can walk all this back. But in the meantime, he's got everybody's attention. And I'm not talking negative or positive. He's got the world's attention, and maybe the world's going to listen and he'll get something. So the marketplace today thought that was a bit of a positive. And while the market closed off its highs, it was still further from its lows. And you had gains in the S&P, the NASDAQ, and the Russell. When we look at the dollar, that sank, and the metal shot up. So this was a risk-on mentality day. I'll give you the schizophrenic thing because that's what you're dealing with. You get an up, you're getting a down. I have been trying to tell you, my loyal listeners, and there's many of you, that since January 28th, this market changed its character. And you entered in stock indices a trading affair. You also entered in the grains what's called weather markets, which are the hardest markets in the world if you've ever traded one to stay with. I'm not saying you don't know that they're coming. I'm saying staying with them is hard. But let's get into the financials and see what's going on. I'm going to come back to the Fibonacci retracement level, and this is of the March S&P 500. We see the high of 2878.5, and yes, that was made right around that January 28th time. You come down right at the beginning of February, and you have been walking back and forth in here with literally a thrust to the upside that fails, a thrust to the downside that fails, and you come back. If you're trying to catch these moves, God bless you. They're hard. They're more of a day trader move than they are for the average guy out there. Now, where the market is trying to fight a battle, in my opinion, is the 18-week moving average of closes. And that you see right here. And yes, for the first time, we had gotten under this weekly average since all of 2017. That's important, too. The market lost that runaway structure that it had through 2017. Now, when we just focus on the current action, and each bar represents 1 day of trading, and I put a swing line on, you have a higher high, a lower low. If you bought trying to get the follow through, it didn't go anywhere. If you sold when you cleared this low, you didn't get very far either. The markets are whipsawing back and forth. And when you add more moving averages, a little bit of a story is starting to show itself. You found that there was support on this particular break back towards the 100-day average. The first rally back to the 18 with some resistance. You got over it. You've stayed over it. I would not be surprised to see that it supports itself. But in order to get a trend going, you either break under 2647 before you get over this number for a pattern of lower highs and lower lows, or you can even just come down, not take out this high and close under 2701, and I would have to say that on the charts I'd be having lower highs, lower lows. So there's a couple of things there. Can you get a bull signal? No. And that's the important thing. I can't come up with a bullish signal here. So I wait. Is there any signal on that right now? There isn't. There's what ifs, but they're not there. Obviously, if you clear this high, you're going to be running right into the upper Bollinger Band at 27.92, 3 ticks higher than where that is. If you break under this low, there is 37 points left, but it's a heck of a risk. This is not a good chart pattern. That's as simple as I can put it. And momentum is not helping you. It's gone flat, and if you look at it, right into the 50s and 60s, about as flat as you can be. I go to the NASDAQ, and I'm looking for a story there. First thing my eye goes to is I have an overbought condition. Well, that prevents, it's one of my filters if one were to buy the market. I don't like to buy an overbought, and I don't like to sell an oversold. So that's a problem for me. I then look as a chartist at the pattern of a higher high, lower low. Again, I don't have a trend. I see the bias is up, overbought market, no trend. Why am I wasting my time? The Dow is similar to the S&P. In the sense that while you currently have the higher high and lower low, if you take out today's low, the market puts into play a retest of possibly the 100-day average, and if it followed further on that, the lower Bollinger Band. Is there any number to turn it bullish is what I ask. Well, first off, if you went straight up from here and even took out that high, you still end up with a lower low and a higher high. So the only possibility is bearish, not bullish. That's good to know. The market closed at 24,852, and that's under the 18-day average, so you're going home with the downside bias. I'd say there's more bearishness in the market than bullish, but I don't think anything's compelling right there. When I come to the Russell, it's similar to the S&P and into the Dow. Yes, you have the higher high and lower low. You'd have to close under 1523 to get the bearishness going in the market. If the market takes out 1567, 7 points higher is your upper Bollinger Band. That's of no interest, and you're overbought. So I'm going to stick with what I said. Whipsaw markets, more possibility for some downside than upside if certain events happen, but they haven't happened. This market, the stock indices, I don't see a trend out of. When I come into the VIX, I see no trend. I have a market that's got a lower low and a higher high. What I did have was a market that lost its embedded reading back here. This is when it lost it. But the day it lost it, it went to the 18-day average. It had already hit it. So I have an oversold market with a downside bias that isn't trending. I'm not getting an edge there. What about in TLT, which is the interest rate popular ETF? I've got the higher lows. I could argue lower highs. I got nothing. And it's sitting on the 18-day average with flat momentum. If you think I'm not a frustrated chartist right now, you'd be very wrong. I am. In the bond market, if you were to take out the low right here of 142.21, and you close today at 143.12, you could end up with a pattern of lower highs, lower lows. But what you actually have in place right now is a bullish pattern. 143.2 is the support, the 18-day average, and to break that support with the higher lows, higher highs, you have to take out that 142.21. This market's in an uptrend as I see it with upside bias. In the 10-year note, the market at this time of year has seasonal influence to the upside, not the downside. I wish I could tell you I know all the reasons why I don't, but I do watch the seasonals on a number of studies. You've got the higher lows, you got the higher highs. The market is closed under the 18-day average. I wouldn't be surprised if the bulls want to retain control. They get over today's high, and they look very carefully to not let the market slip under that low. Let's assume that doesn't occur, and you slip down instead. Well, if you were to take out 119.21.5, the lower Bollinger Band comes in play at 119.17, plus you wouldn't have a trend. You'd have a higher high and a lower low. So the only possible one is possibly that one to the upside. Dollar index. Do you remember what I said recently, if you're a regular viewer of these? I said this is what we call, and I want to put it in quotes, ugly, U-G-L-Y, chart pattern. The swing line low is actually above an actual low. When that happens, and you get that occasionally, go back, you're not going to find it very often on the chart. You really got to look for it. But when it happens, to me it means go to the sidelines, because you really don't know what the real trend of the market is. I know resistance is up at the upper Bollinger Band. You hit it. you started backing off. Theoretical supports the 18-day average, and momentum is turning down. That was Friday's action. Remember, we're already at the end of Tuesday. On Monday, you fell back to that 18-day average, held it, and today you're slicing through that. If you can get under these lows, actually 89.42, I can make a definitive call that we've got a higher high and lower and low play at work. That's not a trend, but at least I know what I've got. If it continues down, what comes into potential support is 88.77, let's call it, the lower Bollinger Band, with current resistance 89.78.5. A cleaner chart without a trend right now is the eurocurrency. You have a pattern of a lower low, and notice it hit the lower Bollinger Band, rallied, went up to the 18-day average, hung there yesterday, and today you broke through things. But you didn't need today to take out that high. And when you took that out, you ended the downtrend. You ended up then with a higher high and a lower low, and as you can see, you followed through, and now you're following through further. I think these markets are caught in this sideways action, and if you think of the events of the day, are tariffs coming? Aren't tariffs coming? Is Trump going to lose Gary Cohn? What's going to happen when he has a Saturday meeting? I believe it's in Pennsylvania with steel workers. There's just so much here to deal with right now. And then we have the jobs data coming out on Friday, and for this currency, we have the European Central Bank. I think that's Thursday as well. There's just a lot on the agenda. In the British pound, the trend is down. First one I'm saying with a trend. Lower highs, lower lows, downtrend, resistance 139.18, the 18-day average. The part of the trade I don't like, there's two parts actually. I don't like that the risk is so big. About 170 points. I think you can do better than $1,100 worth of risk on a trade. And you have a market, if you're going to sell it, that's in oversold territory. Any reading under 30 is oversold. In the Japanese yen, you have an overbought market. Yes, you have an uptrend. Yes, I'd expect support at 93.54.5, the 18-day average. But again, you have an overbought market. Bitcoin looks to me like a market that the momentum is turning before price back to the downside. I think these rallies close to, but not quite hitting, the upper Bollinger Bands may have been enough to take the air out of these markets temporarily. I'd look to see what happens here at the 10,220 level. If you take that out, you will change the pattern of the chart. In the crude oil, and this is Brent versus WTI, I got the names right finally so I can easily say it. I thought 350 area was going to be the support zone, not upset with 310. And when you look at the energies, well, as you can see, you've got a market with a higher high and a lower low. We get the EIA report in the morning, and that's what I think we have to focus on. How's the market going to react? But there's no trend going into the report. Higher highs, lower lows, momentum up, but knocking on the door of being overbought. A 70 reading is overbought. When we come to the gasoline, a higher high and lower low, I wouldn't know what to do with it. Nat gas finally hit the Bollinger Bands past 2-3 days. Maybe it reaches for the 100-day average, but this is a zone where I would be surprised to see pros aren't taking money off the table. Now, one of the things we do that you don't get, you heard what I said, that you don't get, is we're a commodity firm with a finite group of customers that we deal with. We're not dealing with stock clients. We're not dealing with derivatives out there. We are futures. We are options. We are about strategies. We write about it all day long. This is a firm that has a department that works with people, puts out ideas, tells you what's going on in the old trading pits, what's going on new, how many options being bought and sold, where they are and the strategies from them. And you can specialize the information we send to you by just choosing which category you'd want. Now, in all honesty, if you're not our client, you're not going to get it. You can get a free trial, and that's what that says. Give us a call, go to our website, sign up for it. Why don't you see what commodity people write to other commodity people about? I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.